In this video, I'm going to break down this Euro USD trade from a retail and smart money perspective. Hello and welcome back to the channel. I hope you've had a profitable week so far. In today's video, I wanted to go through this trade here, which was something I found in my back testing. It was a trade I actually missed when trading live, because truth be told, I wasn't in my zone last week, I wasn't trading in the zone, and I wasn't fully focused. So I actually missed out on a few good trades. But a lot of my students actually took this trade, which led me to realize this would be a good trade to cover. It's very systematic. It has all the signs of a retail trap. So what I'm going to do is break this down. And first of all, I'm going to go through a few of the concepts you will see in the free course if you've taken it. If not, you can do that going to the link in the description. And then after that, I'll break down how this trade would actually have been formulated, executed, and managed. So before we dive into the actual setup, what we need to do is go through a few concepts real quick for those of you who obviously need a refresher or haven't seen these concepts before. Now, when we talk about my style of trading, which is essentially supply and demand focused, I branded it as smart money because it's easier to explain what it is, but it is generally using the concepts of supply and demand, imbalances, liquidity, all of these different things. And this approach of trading that I take, as well as many others that you may see nowadays, actually goes against the retail flow. We're talking about support and resistance, chart patterns, trend lines, all of these different concepts that generally formulate a lot of traps for traders. So this trade actually incorporates a few of these traps, so to speak, and the first one is going to be support and resistance. Now, support and resistance is known as invisible lines that price bounces off. So up here we have a resistance, down here we have a support. When we see a support floor in price or a resistance roof in price, we generally know that price is going to go and take that level out. Why is that? Due to liquidity. Liquidity is essentially orders, right? So when we have buyers here, here, and here, what we are generally going to see are stop losses in this area below. What the market generally does then is push through the support, trade into those stop losses, collect that liquidity, and then push the other way. What this does is essentially frees up orders into the market for these guys to take on, which is why we get the huge movements after the liquidations, after the stop losses have been hit. So this is a characteristic that you'll see in that trade we just went through. And another one of the big characteristics covered in my free mini course is chart patterns. And you'll also see chart patterns playing a role in this trade as well. So I don't know if you've ever heard of a head and shoulders pattern. I'm sure if you've done any level of trading, you probably have seen this. It's a pattern that looks something like this, where we have a left shoulder, a head, and a right shoulder. And the idea is that we have what we call a neckline here. This is a support once again. And the idea is when this support breaks through, price will then pull back, retest, and then sell off massively. So this is the general way that, retail traders will see a head and shoulders. But from my personal experiences in the market over the past few years, what I see is actually more so a move like this, where the market pushes through and then pushes all the way back to the upside. Once again, acting as a bit of a trap, because we have, first of all, any retail traders who were buying, seeing this as a support, their stop losses are going to be within this area. Sell stops as well. Traders who are using sell stops to enter a trade. So for example, we may have traders who place an order to automatically sell them into the market once that low is broken, targeting, for example, the next support in the trend. So this also forms liquidity. So we know down here we have sell stop liquidity, and we also have the stop loss liquidity as well. So that is why, after seeing the break of the neckline, we often get those pushes up, because the market pushes, collects all that liquidity in the forms of stop losses and sell stops, and then the market drives massively in the other direction. So keep in mind these two concepts. If you need further depth on them, as I said, go over to the free course. But for now, keep these in mind, because you're going to see these active in this trade that we're going to go through. And I think seeing this breakdown will be very beneficial for you if you are stuck trading these retail patterns and struggling to find success. So here's the price action that this trade formulated from. First of all, I'm going to break it down from a retail perspective, and then I'm going to show it you from my kind of trading approach, so you can see the differences in both and why the one I use obviously digs deeper into the price action and the real market flow, and why that one actually ultimately succeeded in this example. So let's break it down as a retail trader would then. Well, first of all, we have a trend line here that we can see. We have obviously multiple taps. So the idea is if we were to bounce from this level, that would then formulate a buy trade. The alternative would be that we would hit this level, break through, and then we could look for a retest to sell off. So there's one confluence. Obviously, we could be looking for a trendline break to go bearish. And then the second confluence is if we go to this tool here, head and shoulders, we can actually mark on. We have a left shoulder, a head, and a right shoulder forming here. So what we could also be looking for from a retail perspective is confluence number 2, head and shoulders, push down. And then when we break the neckline, which is going to be this level here, we would then be looking at shorts. And another thing we can see here, kind of contrary, but as we know, retail traders aren't all going to be looking at the same thing, is a support area. So we've seen 1, 2, 3. Traders are going to be seeing this area here as an area that price will bounce from. Okay, so we may have a support line drawn on here, which could mean that we have stop losses sitting below in this area here. So what we can tell from all these confluences is we're going to have a few types of traders. We will have the buyers looking for trend line and support retests. Their stop losses are going to be beneath those lows. And we also have the sellers who are actually looking at the head and shoulders and putting on sell stops in case the head and shoulders breaks, the trend line breaks, then we'll be looking for a clear short down towards, for example, the next support. So we obviously have a massive amount of liquidity in this area, as you can see, because we have loads of sell stops from all the selling confluences, and we also have stop losses from the buying confluences as well. So this looks like a prime area for price to actually come down into, tap in, and then obviously sell off heavy. Now for me, and the way that I see this, I see liquidity in a totally different way. And I would say that, okay, well, I know there's loads of stop losses here, and I know there's loads of sell stops here. So what I actually anticipate is likely to happen is price is going to push down, hit this area, and then move away. If this could be paired with other confluences, which it easily can be, which I'll break down in a moment, you'll see how well this can work on a recurring basis, how often we see trades formulate like this. So I'm going to leave this on for now as an area of massive liquidity. But if we break the trade down from my perspective, I can see here that we've had a higher high in this larger trend, meaning we are bullish. Okay, if we look at the trend, higher highs and higher lows consistently, we've had higher high, higher low, higher high. Now what I'll be looking for is for the market to obviously take the liquidity and move up. But why would I do that? I'm not just going to blindly do that without confluences. If we then zoom into the current price action here, we can see that we've got, first of all, an imbalance. This is basically an open area left in price after a large up or down move. As we can see, open space there, and a demand zone. So demand zone and supply zones are the way that I kind of view supply or support and resistance. My kind of support is a demand zone, and it's actually more based in logic because what it essentially is an area that a lot of buying pressure has entered the market, a good place to buy from, essentially a level that people have been happy to purchase that asset at, meaning if we do come back, we're probably going to get more buyers at that level, more buying pressure, therefore higher prices. So I can see here, clear demand zone, just above an imbalance, sitting in that area of liquidity, just beneath that support floor and right at that area where the sell stops will be triggered for breakout traders of the trend line and breakout traders of this head and shoulders pattern. Therefore telling me that, well, if there's so much liquidity here, so many sellers going to be getting in and buyers going to be stopped out, this is probably a very prime place for me to take a trade. So what we could look for is to target new highs. We could obviously look for extended targets, but for this example, we'll just run with this high. Why would we go for that? Well, we know we are in an uptrend, right? We have these higher highs and higher lows forming. So if we can come down, liquidate these positions, we'll probably easily fulfill this and then potentially move on further towards those larger targets. But what we can do now is simply wait for the market to come down, take that liquidity, fill that demand, and then make the drive to the upside. So a trade for me would be something like this: entry on the demand zone, stop below, target into the high. So looking at around a 7R trade. And then if we just let the market play out, we'll see the neckline was completed. The neckline break occurred. Let's just mark that on. There's the neckline, these two support floors. The trend line as well was broken. So we have sellers coming in here heavily, buyers here being stopped out, and then our trade was obviously triggered in. And as we then see, a very healthy rally to the upside. So there we go. That was a quick breakdown of a trade that I would apply in my system versus a trade that you may be taking with those basic retail concepts in mind. Now, I will say this is obviously a hindsight trade, okay? I did take this live in my backtesting. I did not know what price was going to do when I executed the position, but I did not take this trade live. As I said, I wasn't in the zone. I'll take accountability for that. Not every trader has perfect mindset all the time, you know, and that's just how it is. But like I say, a few of my students did take this trade, which essentially goes to show this is directly systematic in what I teach and the approaches that I personally take myself when I'm in full focus. I hope you found this video beneficial and I hope you've enjoyed it. I hope you get a lot of information from this that you can use in your own trading and help you to break out of that retail mindset and into a more focused, logical approach. You can see here from my example versus the retail example, it's a lot more simple, it's a lot more clean, a lot more laid back, and a lot more logical and successful. Now this can work. If you are finding success with retail concepts, keep going. There's no reason to change up just because I've showed you this video. But from my experience, I know that most people do fail with this. So if you are struggling, it's time for you to kind of adapt this mindset. I do have a free course where you can learn some basics on this. There is a link in the description to that. It's 13 videos long. And if you do want more education and you do really want to take this seriously, then there's also a link in the description to join my trading academy, where you get my full trading systems and you'll essentially get step-by-step guidance by myself on how to apply all of these systems. So all the information's there. Won't push it too much, but it's definitely there if you want it. And I hope you've enjoyed this. I hope you enjoyed the free course. And if you do join me, I look forward to working with you. So thanks for watching this video, and I'll see you in the next one.